Ladies and gentlemen, it's our pleasure to have with us Mr. B.C. Patnaik, Member Life IRDAI. I request our PGDM students to welcome him with a bouquet. Thank you, dear student. With great pleasure and a profound sense of honor, let me introduce to you Mr. B.C. Patnaik, who would be presenting the keynote address. Mr. Patnaik was appointed as Member Life IRDAI by the Government of India post his superannuation as Managing Director of the LIC of India, a postgraduate in political science, and a fellow of Insurance Institute of India. He had an illustrious career in LIC spanning 37 years, starting as a direct recruit officer in 1986. With rich and diverse experience of marketing, customer relationship management, underwriting, group business, personal and training, Mr. Patnaik has worked across the length and breadth of the country at various leadership positions. Prior to the current role, he was the Secretary General of the Council of Insurance Ombudsmen. Additionally, he has been exposed to various programs in ISB Hyderabad, IIM Lucknow, and National Insurance Academy, Pune. With this brief introduction, I request him to kindly come forward and present the keynote address. Over to you, sir.
Thank you, ma'am. Good morning to all. My sincere apologies for coming late. Perhaps I thought I was reimagining a bit too much. So we have on the dais, Director NA, Dr. Tarun Agarwal, Mr. Garg from Tata AIG, MD CEO, Satya Kumar ji. Off the dais, we have Srinivasan sir. Good morning to you, sir, and all the dignitaries. So perhaps I didn't want to miss out on this program because I owe a lot to NIA. Whatever I have become, I can give credit to NIA, and I can tell the students that, yes, you are lucky to be part of NIA. You have a big future, as Mr. Garg was telling. So the insurance industry needs a lot of human capital. So as Dr. Tarun Agarwal was telling that data is not the new oil also. The human capital for insurance, I can say, is the new oil. There is a lot of dearth of it, both in the managing part of it and also the marketing part of it. So, and all distinguished dignitaries, it's a great pleasure to meet you again, because normally we meet in IIDA. So that time we are very serious in welcoming you and planning for you. But here I think I can be a bit relaxed. So coming to the theme of the current year, this reimagining insurance for all by 2047. Yes, sometimes people may feel as it's audacious, as Mr. Agarwal and Mr. Garg was telling, but again I say, perhaps it's too late. Suppose when we discuss about the brief history of insurance in India over the last 20-25 years, we have found that, yes, if you see life insurance in all its parameters, group, PM Jivan Jyoti Yojana and everything, so 52 crore lives are covered. So we may say 140 crores, what is 52 crores, because we may be cynical. But fact is that, okay, we are trying to cover the adult population, the breadwinners. Similarly, if you take health also, again, a lot of credit goes to the Government of India, Ayushman Bharat and everything, and a lot of group insurance facilities. Again, there we find 52 crore lives are covered, where children are also covered. So there we can say perhaps 140 crores should have been covered, because out-of-pocket expenses is something that is very huge in India, and the level of insurance also is perhaps not adequate. Even in life insurance, you see the average sum assured is very, very low. So what we call it mortality protection gap. MPC, which is 83%. So when you put it into monetary terms, it is 1,320 lakh crores. 1,320 lakh crores. Just imagine, and the premium needed for it, and the number of years it will be needing to cover that gap. Suppose I'll give you an example, like the life insurance asset under management. Out of the 60 lakh crore asset under management, it's more than 55 lakh crores is the life insurance business. So it can grow up to 10 times. So if the employment generated by the life insurance industry alone is somewhere around 28, 29 lakhs, including marketers and everybody. And when we include also the employees of the brokers who can sell both general and life, it goes up to 50 lakhs. Just imagine the power of employment it can unleash, it can generate. Again, people may say, is it possible? You see, many economies of the world, it has become possible. Because the insurance penetration level, like Mr. Garg was telling, Japan, if you see catastrophic insurance, it's 90% covered. India, we can have a small semblance like Fasal Bima Yojana, like 4 crore farmers are covered in a period of last 10, 15 years, out of a possible 12 crores. But if you, when you go to property and other things, you find percentage is hardly 5%, 10%. Many other coverage, many other matrices. 4% overall penetration, including sliding from 4.2 to 4. Whereas the economy is growing higher, and insurance is not able to catch up. Banking, you see, perhaps has made greater strides than insurance in India. Still, they say, no, for a developed country, the level of credit or the percentage of credit has to be 150% of the GDP. Suppose 300 lakh crores, roughly, we put it round for the convenience of everybody. So the amount of loan that should be sanctioned, it should be 450 lakh crores. Because the Indians were very averse to loans also. Because people say we don't want to fall into a debt trap. Whatever money I have, I'll manage myself with it. I'll try to save and do, but rather go for a debt. But for businesses, it is simply impossible. You cannot save and do business. You have to go for loans and you have to do business. So it has to be 450 lakh crores. Yes, in housing, like which is called mortgage loans, our friends from HFL can justify that it's a booming market, big market. They are not able to grapple with the request. Am I correct or no? And if you see State Bank of India, the standalone housing loan business is more than 5 lakh crores. If somebody will assess their success as a banker, they'll say that perhaps the housing loan portfolio has been a great help to them. Why I try to connect that? Because that leads to a lot of property insurance in various forms. Today, it's just fire insurance. It can be expanded to many more variations of it. So wherever we look at it, suppose health insurance, maybe 10 years back, it was very negligible. Perhaps the premium would be around 10,000 to 20,000 crores. Today it's nearing 1 lakh crores. And the way it is growing at the rate of 20-22%, perhaps another 10 years' time, it will be 3 to 4 lakh crores. And perhaps that is the only insurance which is greatly in demand, where people desire and the insurers many times say no. Life, it's the other way. The supposed to be insured person says, no, I don't want life insurance. It involves a lot of marketing. I understand digital can help a lot. Dr. Tarun Agarwal was telling about digital symphony which is further, that means bolstered by Mr. Garg that yes, cost of intermediation is very high and perhaps digital can help. Yes, that's true. But again, here we come to the point because insurance is something for which a climate has to be created. That enablement process has to happen in a subtle manner, in a very forceful manner, in a very, very, what you can call aggressive manner, or whatever you can say. But perhaps in our country, we may take another 20, 30 years to create that climate of insurance. And we need human resources of the greatest ability, of the greatest acumen. Today, when we see, because when we were making analysis a few days back in the Insurance Advisory Committee in IIDI, we find that the assets under management are not being created. If you see health insurance, the asset management is only 22,000 crore at the moment. Entire general insurance industry is only 4 lakh crore. Perhaps people may argue the model of business is such that it is not in the business of creating assets under management. But for the survival of the company, for the growth of the company and all these things, I think there should be a certain minimum asset under management. And why it has not happened? Because, again, because of the lack of skillful persons, both in marketing and in administration. Insurance sales throughout the world calls for long-term relationships. Wherever you find, in any of the geographies in the world, find they take pains to create star marketing persons in insurance. When you see most of the life companies also, excepting the top 6 or 7, the assets under management are less than 10,000 crores also. We need to analyze whether it is good for the country, it is good for the company, it is good for the policyholders. And when we analyze, we feel that there has been a clear lack of investment in human personnel who can find a career, a long-term career in those organizations, both in administration and marketing. So these are the biggest challenges. So there I feel institutions like NIA, which has created a name for itself, not only in India, in Asia, in the world also. And particularly, I should give Srinivasan sir is there. So I won't mind, sir, that I have to tell that, yes, during the last 5, 6 years, it has reached a certain level where we all feel proud of. And I'm sure that Dr. Tarun Agarwal will take the legacy forward. And the students of NIA, they have been engaged in various insurance companies as well as insurtech companies and doing a wonderful job and are being appreciated for it. So we need the support of institutions like NIA to further build the capability and also the capacity of all the insurance professionals, whether it is marketing, whether it is technology, whether it is in actuarial sciences, whether it is in administration, customer service. So these are the challenges. Perhaps if we could have met all these challenges during the last 20 years, along with the growth path of it, the journey for insurance for all could have been lessened, and perhaps in another 10, 12 years' time, we would have reached there. Yes, because now, from the regulator side, we need to be aggressive. We need to reshape ourselves, reorient ourselves, because time is running out fast. Because whether insurance comes first or a developed economy comes first is a big question. I should say that, yes, if there is not a very enlightened insurance atmosphere, then even if the economy gets developed, that it will flounder in its journey. And the economic development happens, and the insurance framework and the insurance atmosphere is not ready to support that economy, then perhaps that will also affect it. So to call it a truce, both should go hand in hand. And when we know that the country is marching forward, rather I say every second, every hour, every day, fifth largest economy, fourth largest economy, 2030, third largest economy, $10 trillion, so many things. There may be skeptics, अरे ये सब बोलने की बात है, but yes, it is all becoming true. So as Indians, we can feel proud of it. And we have a job at our hand. We have a job that the insurance landscape has to be vibrating, has to be pulsating, should be ready to meet all the challenges in the future. Just to give a brief data, I can say, regarding life insurance, which was 27,000 crore in 2000, today it is almost 3 lakh crores. 3 lakh crores in 10-11. Now it is 7.82 lakh crores, 8 lakh crores. If you put it the number of times, the life business has gone by 30 times. General insurance, it is 22 times, from 9,522 crores to 2.24 lakh crores, including health. Yes, number of policies. This is because from the IDA side, we have to give confidence to the country that yes, things are happening in India and it is in the right direction and it can go. We have reached a platform and we can make a big jump from it. From 2.53 lakh of life policies in 2022-23, it has increased to 32.8 crores. These are all individual lives. I'm not including group or Jeevan Jyoti Bima because that is where the pull, we call it the pull impact from the customers. Because simply push will not make it such a staggering figure. There is a demand for it. People are paying premiums to the level of 7.82 lakh crores every year to the life insurance industry, which is quite a big amount. So there is a great pull for the life insurance business. But again, to ensure that there is continuity, there has to be investment in human capital. And perhaps this figure of 7.82 lakh crore, what we imagine by it will be around 50 lakh crores. So for non-life policies, there is a great jump. Yes, Tarunagar was telling from 0.43% to 1%, but again, that doesn't give the correct picture. I should say from 4.3 crore policies, it has now risen to 30 crore policies. It is another matter that I, as a person, I will be having 2-3 general insurance policies, one health, one motor, and other things. But that means the upward growth is there for everybody to see. And when we see so many general insurance companies, they are working in India and with good presence, we can feel that, yes, this is one sector which can really reach global standards in another 10-15 years' time. And from the idea side also, that as Mr. Garg was pointing out, there has been a lot of liberalization in the distribution segment. New channels like insurance marketing firms, point of sales persons, motor insurance service providers, you may agree or not, along with traditional channel distribution like individual agents, insurance brokers, and corporate agents. There are 575 corporate agents, 569 IMFs, 616 insurance brokers. So insurance penetration, okay, it's a big issue because the country is growing fast. The insurance sector is not able to catch up with it. So all of us here, because it's a good opportunity for everybody. I can, when I see the students, I can see a very bright future for all of them because they will be always in great demand. They can strengthen their capabilities even after they leave NIA. And I'm sure that the insurance industry will be so much in the growth model that they will be finding their careers going very smoothly. Here is what, and another thing, if you see the insurance density, it was only 9.9 USD in 2000. Now it is 92 USD. Okay, in rupee terms, when you convert it, it's 7,000-8,000 rupees. But India is now capable that even if you take the top 50 crores, they are capable of contributing at least 50,000 per person. And just imagine to where it can go. It can grow by another 7-8 times in a few years perhaps. So this is the future that we see in the life insurance industry. Claims, yes, the insurance industry and COVID, everybody who has been affected by COVID, they will understand that the great role played by the regulator and the insurance industry, both life and general. So today, last year, it settles around 5.30 lakh crores. 5 lakh crores, and all of us know when the claims are paid, it is just many multiples of the premium paid. 5 lakh crores and 30 lakhs claims. So that is the benefit that the insurance industry gives to everybody. Now, I should say that because IIDA is what you can call restless, and we desire that the industry should grow faster. We always have our ears open to everybody. The Bima Manthan exercises are being done now every quarter. And I can say it's a great learning point for all of us. And we take all the inputs and try to put it into a policy perspective. And whatever happened during the past few months, and I can say with pride that the use and file procedure was extended for all health and general insurance products, and most of the life insurance products in line with the reforms agenda taken up towards having a fully insured India. The insurance companies can launch these products without the prior approval of IIDA. This is a stepping stone towards improving the ease of doing business in the insurance sector. So the industry is shifting from a rule-based regime, as Mr. Garg was telling, and Mr. Tarun Agar was telling also, to a principle-based regulatory regime. So we are also exploring the various possibilities and opportunities offered by the risk-based capital framework and risk-based supervision framework. And I'm happy that NIA is also working on it. And everybody, that means all of us together, will ensure that the transition is smooth and the industry really gets the benefit out of these new frameworks. So we have amended, in a bid to promote ease of doing business, we have amended 7 key regulations. The IIDA registration of Indian companies, regulations 2022. Now, investment through special purpose vehicle has been made optional for private equity, thereby providing flexibility to insurers. Investment threshold by individual investor has been raised from 10% to 25% of the paid-up capital and 50% for all investors collectively. Even subsidiary companies are also allowed to promote insurance company subject to certain conditions. Then IIDA Assets, Liabilities and Solvency Margin of General Insurance Business Regulations 2022. This is with a view to increase the crop insurance penetration and efficient use of capital by general insurers. The period of considering state central government premium dues for calculation of solvency margin has been increased from 180 days to 365 days. It has been greatly welcomed by the entire general insurance industry. The solvency factor related to crop insurance reduced to 0.50% from 0.70%. So it's a great relief. Then, and I can say 4 crore farmers, as I was telling earlier, they are taking the benefit out of it. IIDA Actuarial Report and Abstract for Life Insurance Business Amendment Regulations 2022. This is efficient utilization of capital by life insurers. The factors for calculation of solvency has been revised for unit linked business without guarantees from 0.8% to 0.60%. And for Pradhan Mantri Jeevan Jyoti Yojana from 0.10% to 0.05%. I think all the promoters of the insurance companies will be very happy. They need not infuse a lot of capital. Then the Appointed Actuary Regulations 2022. Here the responsibilities of the appointed actuary have been enhanced by introducing provisions for identification, monitoring, reporting, and recommending actions to be taken for the risks affecting the solvency of the insurance company. Another important is other forms of capital. The requirement of prior approval from IIDA for raising other forms of capital has been dispensed with. The threshold for raising such capital has been increased to 50% from 25% of the paid-up capital, subject to 50% of the net worth of the company. Then regulatory sandbox. The experimentation period for the insurance has been raised from 6 months to 36 months. Also, instead of the existing cohort approach for approval and clearances, continuous clearance approvals approach has been adopted. Then insurance intermediaries regulations, the maximum number of tie-ups for corporate agents, was Mr. Garg was telling, that life general has been raised to 9 insurers from the existing 3. Similarly, IMFs can tie up with 6 insurers in each line of business instead of existing 2. The area of operation for IMFs has been expanded to cover the entire state in which they are operating. Earlier it was only district. All the above regulatory reforms are going to offer multiple opportunities, not only to the existing insurance companies, but also to the new players. The reforms unveiled by the regulator is expected to prompt the insurers to reset the business strategies. In a change scenario where the customer is king, retaining customer loyalty is of paramount importance. So here I say that the role of insurers, they have to ensure that the requirements of customers are identified and fulfilled beyond the sales process. As I was telling in the beginning, that is another challenge. All insurers, including big and small, this is a big challenge. So this is perhaps deviating from the world standards. Because we call it in Hindi something called Ayaram Gayaram. So, but the insurance business is not like that. Rather, no other business, no other customer-facing business, no other customer-centric business can imagine or reimagine itself in the way today the insurance industry functions. And if you say that what is the real success rate of engagement with the customers post-sales, I should say it should be around 20 to 25%. Because when we do not have a visibility of people continuing with us for long, when we do not have an idea of people having adequate insurance knowledge and experience to manage critical affairs of the insurance companies, how can we expect that they will be having the philosophy of continued customer service? It's a big, big challenge for the country. And no insurance industry can survive with continued customer engagement. Because insurance is not a one-off affair. Mr. Garg tells that, okay, I can give a 7 days insurance also. But I should be happy if the person connects with me and after the 7 days over, he says, whenever you buy a car, I'll give you a 1-year insurance. It cannot be like Ola or Uber, where we just where the driver forgets that, we forget the driver also. That's a big challenge. It's a philosophy. Time and again they say it's a doctor-patient relationship. They say, no, today doctors are becoming commercial, they're not having that connect with the patients and all. All said and done, but there is a connect. There is a connect. The doctor feels responsible that he is my patient. During the course of the treatment, and any time after that, if he is able to recollect, remember his name, face, and other things, or think from the records, he says, no, I'll take care of you. You have been my patient, so if there are more complications, I'll address to it, or I'll refer to a bigger doctor or a bigger hospital. There is a connect. But today, when all of us here, because all of us are dignitaries from the insurance industry, we can ask this question to ourselves. That is the big challenge for the insurance industry in India. Like they say, put your hands in your hearts and tell to yourself that whether I am doing the right thing as an individual, as an executive, as a promoter, as a CEO, as a company. Then there will be a lot of questions from within. And the answers will be, yes, I'm doing something, but more needs to be done. And there I can appeal to NIA to have more of customer-centric engagements with the entire value chain of the insurance industry. Like when Srinivasan sir was there, he was kind enough to allow even the base level marketeers, which was the first for NI at that point of time, to design a 1-week course. So that is what we desire. It is another that NIA is creating good talents, and many are getting good jobs in the software industry. If it is InsurTech, it is okay, it is related. But many are getting jobs also in other related industries or other unrelated industries. So it is good. It goes to the credit of NIA and the placement cell of the NIA and the capability of the students of NIA. So we desire that they should be placed everywhere. But there is a continuous need of such kind of talent. Whether we are ready to invest as corporates, it's a big question. My experience during the last 4 months, talking to many of the MD CEOs, thankfully, many of them were very intelligent, highly qualified, and many of them readily accepted. And I can say within a period of 2-3 months, they could find a change. And they could feel that vibration pulsating within their organization. And they say, sir, we do not know whether this growth of 40-50% that we are having because of this idea or perhaps of something else. That is the power of building human capital. I think this is one takeaway we can say when we reimagine insurance for all by 2047, or reimagining. We cannot reimagine insurance without reimagining the training landscape, the manpower building landscape, the continuous engagement with customers landscape. It will be Chimera or something like that. It will be. This is practical reimagining. Although the reimagination will remain in the realms of higher reimagination. And every year we'll be finding out new coinages. Otherwise, India is a great country, and I don't find anything wrong with the people or the disposable income for insurance or the paying capacity or anything else. Even when we analyze lapsation and other things, it is because of lack of engagement only. Thousands of surveys have been done. Another survey which was done by SEBI now, they find that the authorized persons who are selling these shares and other things on behalf of brokers, they are misleading them. So they are finding out new regulations for that. So here I can say that insurance, when they are sold by intermediaries, brokers, corporate agents and all, whether the right people are there or not. Yes, we are also thinking how to bring them under our control. It's very difficult. It's not easy. Rather, we feel that everything should be there in the arena of self-regulatory organizations. Because whoever is the regulator, it's a difficult challenge, you see. Bringing out new policies takes months and years. Yes, the power of enforcement, the power of supervision is there. But on the one side, we desire that there should be growth. And in the process of growth, we find that there are the people who are responsible for growth. They are not behaving in a responsible manner. And the regulator's job becomes more arduous in trying to control them. Then perhaps everything becomes anachronistic. So all the company heads who are here, I can urge to them. Through NIA, I can also say that they can reach out to all the companies. Now 70 odds are there and get my point. I think you are having sufficient capacity, you are also augmenting your capacity. And I think it's a great, great opportunity for everybody in the insurance industry. Because this will be long lasting. This will be like treasures for the country. Like suppose, like we call it IT capital of the world, India, if you say. Yes, there has been a lot of investment in the human capital in the IT sector. Today, all the global capacity centers, they are trying to base out of India. They say for the talent that we require, we are getting it here. But whether the same can be said about the life industry talent capital. If you ask me, then again I'll give an honest answer. If the requirement is 100, we are somewhere around 15-20%. It is not the number of people only who are engaged. What is their capability? It should be engaging on months. Otherwise, all the investment that we're making, one day we'll find that perhaps we are nowhere. The pull impact has to be tremendous in online business. So whatever awareness campaigns, because a lot of efforts are being made by the Life Council, the General Council, from the IDA side also we'll be coming up with a lot of awareness campaigns. These people will not gel with them. They'll not find resonance in those campaigns. They will feel, no, it is just like that, I don't believe. What is the basic minimum? Let me do it like that. Only health, okay, whatever my capacity is there, I'll be paying the premium, but others don't tell me. गाड़ी अगर थर्ड पार्टी में निकल जाता है तो ठीक है. Government is forcing कि चलो 5 year two-wheelers, after 5 years we find it drops down to less than 20% of the renewal. Is it the right way to conduct the insurance climate in India? I'm telling everything. When I say climate, it becomes business, it becomes administration, it becomes training. It covers everything. It's honest. So the journey cycle of the customers from onboarding to the final exit from the books needs to be re-engineered with the objective of providing ease and comfort, a sense of commitment by constantly engaging with the customers, and what is most important, is the seamless service delivery during the life cycles that always reassures the customer. Yes, technology, I was referring to you when we were telling digital symphony, and Gargji was telling you technology will be reducing costs. There is no doubt about it. There is no doubt about it. I should say rather, Sri K.V. Kamath, a few days back in the Global FinTech event, festival, he was addressing all bankers and many others from the FinTech industry were there. He told a simple line, evolve your technological capabilities. Evolve your technological capabilities. And when I say the second word, Mr. Prerak Sethi will be very happy. And he told, or perish. Evolve your technological capabilities or perish. So I can say the same applies to the entire insurance industry. It's also a message to everybody here. Good friend Mr. Balgopal is there also. He'll be leading from, from the NIA side. Mr. Doraswamy was head of IT, LIC. So, because without the, I should say, global capabilities in technology for a company, or for a company which is doing business in a big country like India, if it doesn't evolve itself, any company, then it's a very difficult road ahead. And for the insurance industry, our dreams of insurance by 2047, like Mr. Garg was referring about the Bima Bahak. So it is purely, we're trying to make it technology-based to customer. We're trying to reach to the last mile. Where a small, that means person educated 8/10, he can operate a machine and can do a policy for them. So there will be, everything will coexist. Whether it is motor insurance, whether it's health, and because again, but there is involvement of underwriting as a health, underwriting we are referring to. It's a very difficult challenge now. We find that in the insurance industry, there is a dearth of the primary underwriters and the secondary underwriters. They can be marketeers, but the insurance industry pays them more that they have a bigger role. They are the primary underwriters, and the supervisor who acts to see that whether the person has done correctly or not is known as the secondary underwriter. Then it comes to the tertiary underwriter who sits in the office and sees whether everything is correct or not. If that doesn't happen, perhaps we may be facing a challenge in the health insurance industry, and which is my job to address it day in and day out. I scratch my hair. I try to find out a solution that how we can find out. So there I say again, the human capability has to be built up to a great level, and also the customer engagement. The increasing business responsibility is no exception to the insurance industry. The insurance industry shall have to maintain a fine balance, I agree, when you say that, between providing the much needed insurance coverage and also profitability and also ESG sort of thing like that. To promote this insurance inclusion and penetration in every state, union territory, IRD has initiated the state insurance plan in all 36 state union territories of India. And I'm happy to say the efforts of our chairman for the last 1 year. It was not an easy job for you and for all of us. The insurers assigned for states' duties are, it has participation from state administrations. And today, we have these state-level insurance committees established. And very soon, the district-level insurance committees will also be established. In 30 states, the SLAs are working. And in Tripura and Odisha, again, I'm happy to share, it is headed by the chief secretaries. So you can expect a lot of policy action to be implemented in an easy manner, in a fast manner. And in 12 state UT administrators, a single point of contact have been appointed also. District administration of all districts have been notified to lend support to the lead insurers. 46 insurers have appointed a senior functionary as India project head to oversee implementation of the plan by the insurer across the country. I think it will be the greatest insurance awareness campaign in the next 20-30 years. And we are confident that, yes, from the IDA side, we'll be giving all support. I think we have a full-fledged department and a lot of people are involved. In UP, a few days back, the chief minister, the state finance minister, the delegates of the state insurance plan were there. There were a lot of discussions. The state-level insurance committee meeting was there. And we all know there are a lot of gaps in insurance in big states like UP, Bihar, and all. So these initiatives, coupled with the active participation in all the states, bound to create a resilient and vibrant insurance industry, which is more innovative, more participatory, and more inclusive. So once again, I thank you all for the patient hearing, and I'm confident that with active support from the entire insurance industry, and also support from NIA, I should say, the vision for investment for all can be achieved. I am slightly hesitant to say 2047. I say maybe by 2040 or 2035, because I am an eternal optimist. And I think anybody in insurance industry, they do a lot of hard work, and we continue to do our hard work, and will definitely succeed. Thank you very much. Thank you for this opportunity.
Thank you so much, sir. We are truly grateful for your address.